Dan Skelly, the S&P 500 is up around 3% so far this year, but it's been a bumpy ride. What are your expectations for the rest of 2015? Because it's still May. I can still sell and go away.
Right, yeah. We actually think the S&P can do fine for the rest of the year. So to your point, the S&P has had a slight rise this year. Our expectation for the full year is a high single-digit return, so maybe an 8 or 9% return, implying some more upside for the rest of the year. I think key to that is the fact that earnings expectations are just not that high, right? You've had companies lowering estimates for some time, and now you've got a much more achievable bar. Secondly, we think that that tax cut benefit from a lower oil price is still trickling into the consumer economy. Okay, so you haven't had a very aggressive consumer spending environment thus far this year. Frankly, we think that's going to start to show up later this year. So we do think the S&P, powered by both earnings beats and a stronger economic background, can do better this year.
And one stock you like is MasterCard. Yeah. Now, this is having a really great year. It's up around 9% year to date. That said, is it getting a bit pricey here? It's trading at 22 times next year's earnings.
Right, yeah. So it's a good question on MasterCard. We think it can do fine from here on out. It's a very steady grower, right? When you think about that 22 times multiple, they're producing 20% earnings growth year in, year out, and it's very steady. We also like the fact that they have a good balance sheet and they're returning capital to shareholders. But there's really a huge secular trend going on here, right? You've got today 80% or so of transactions still done in paper, which is frankly shocking to me. And you think about how often people in the U.S. use debit and credit. We think globally, and particularly in emerging economies, you're going to see more debit and credit-based transactions over time, and people are willing to pay up for that type of steady secular trend. The other thing about MasterCard that we like is related to my earlier comments about the consumer economy, right? You're starting to see volume improvements in the U.S. and other parts of the economy that have lagged.
You're also a fan of Thermo Fisher Scientific. Now, they beat the street on the earnings line in the first quarter, missed on top slightly because of currency woes. Will this inhibit them in the second quarter as well?
Yeah, so currency's been a big impact, as you know, for a lot of big cap U.S. companies. We think the key thing to pay attention to, however, is organic sales. And when you look at their organic sales number, that's actually held up fairly decent, 3-4% per year. And we think it's going to continue to accelerate as budget spending in the U.S. continues to loosen up. So a major driver for their growth is academic spending, right? And as that starts to pick up, as other parts of the world start to pick up their spending as well, such as China, we think that that'll power Thermo for the rest of the year, despite some of the currency headwinds. Last thing I'll say about Thermo, and we've had it for over 2 years in some of our strategies, the thing we like about Thermo is also secular in nature. When you look at the consumer in China, it's not really a huge driver today. That being said, the government is spending on quality testing, air quality, food quality. Those are major issues in China today. Thermo makes products that actually test for those different food quality, air quality metrics in China, and that's been a major growth driver for them. As China continues to add investment and stimulus in those specific areas, rebalancing to a consumer economy, we think that'll be a huge long-term driver.
And then finally, you're a fan of Delphi. This stock's had a great run so far in 2015, up over 17%. But what's the catalyst to take it higher from here?
Sure. We just saw Delphi present at their Analyst Day about 2 weeks ago in New York. And frankly, the update was very bullish. So the stock has done well, to your point, but we think there's additional upside there. In the near term, we think that the street is just not yet recognizing a lot of the growth they have in infotainment and electrical systems. They are really a play on increasing content per car. So they don't really depend on a huge SAR number. It's obviously helpful, but it's more about the changing nature of the car itself. We saw a really interesting demonstration on autonomous driving. They're going to be a major driver or a major part of that going forward. And so it's really about taking share within the different components of the car. We don't think the street recognizes that as much. The other thing that was positive is in some of their overseas trends as well. As Europe and China economically start to improve, Delphi is also seeing better growth there as well. So those are some of the key drivers.
All right, thanks a lot, Dan.
Thanks, Greg.
And thank you for watching The Street.